Well, joining us now is Jason Furman. He is the former chair of the Council of Economic Advisors. Jason, how are you factoring the effect of tariffs into your outlook for the U.S. economy this year when we don't know to what extent there might be tariffs, where they might hit?
Look, if Donald Trump is right, he has a set of tariffs that would be awful. If the Washington Post is right, he'd have a set of tariffs that were merely bad. Either way, this just isn't what we want to see at this point in the economy.
But how much does it matter to how the economy actually does in 2025? People disagree about the extent to which tariffs, depending on the goods, depending on where they're, the extent to which they're made domestically, would actually affect the economy. Can you sort of lay out how you're thinking about where they might hit that would be particularly bad and where it might matter less?
Yeah. So first of all, there's inflation. That's gotten a lot of attention, but it's probably not a huge impact on inflation. But even a few tenths on the inflation rate could be the difference between the Fed being able to cut rates and it having to hold off or even partially reverse. The bigger issue is that with tariffs, you get less imports and you get a stronger dollar. And so as a result, you get less exports. That's bad both for consumers and jobs. And finally, according to the Washington Post report, even these limited tariffs would include tariffs on things like steel. That would actually hurt manufacturing because we have many more workers that work in industries that use steel. It'll make those industries like the auto industry less competitive, have a harder time globally. And so it wouldn't help manufacturing, it would actually hurt.
I'm glad you brought up steel because we do already have tariffs on steel and quite a few different aspects of steel and steel products in this country. And one of the things it's actually done over the past however many years has reignited a domestic steel industry and has actually raised the prices of domestic steel and some of those steel products higher than other parts of the world, which in turn helped spur Nippon Steel's takeover of, or attempted takeover, I should say, of U.S. steel. So I was surprised to see your comments. You were very blunt on X last week about the fact that that deal was being dashed by President Biden, and wanted to get your take on why his move was the wrong one.
Yeah, look, U.S. Steel is just not a competitive, highly viable enterprise right now. They got this enormous gift of a large investment from a foreign company that was committed to continue to make steel in the United States. That would be good for our economy. It would be good for our national security. Japan's a really important partner. But most importantly, we have rule of law in this country. And the law says that you have a narrow set of national security considerations. CFIUS, which assesses these things on behalf of the president, did not seem to think this was a national security risk. And so to me, this really looked like an abuse of the law, a very arbitrary thing. When other countries do stuff like this, we object. We shouldn't be doing it ourselves.
Yeah, and it speaks to geopolitical dynamics, too, since Japan is a key strategic ally of the U.S. and is one of the top investors in businesses here in the U.S. So how does this speak to how you're thinking about the U.S. economy in 2025 and beyond, where fiscal policy is concerned, where monetary policy is concerned, given this geopolitical backdrop?
Yeah, look, I mean, the president has a long list of things that he wants to do that would raise the budget deficit. Extending tax cuts is trillions of dollars, lots of new tax cuts. On the other side of the ledger, he has tariffs, which are a harmful way to raise revenue. And then he has this commission, which I'm skeptical will generate real budget savings. The backdrop against this is the 10-year Treasury is above 4.5%. It's risen since the Fed started its cutting cycle. It's rising, not because of what the Fed is doing, but because of what investors think about the budget deficit, about inflation. And at some point, I think the Trump administration is going to need to pay attention to that and figure out how to error correct on these big deficit plans.